Hi, everyone. Alexander, Brock, my trading warrior brother, how are you? Same to you, Arena. Hugo, how's it going? Scott, doing okay? Okay, doing all right. Hello, Paul. All right, so um, regulars know I've been pounding the table about NASDAQ relative weakness for weeks now, that this was at least a second drive up here. And if you look at it, we really had our first weekly reversal as the yen is selling off on a little risk off right here. We had our first weekly reversal 2 weeks ago. So we've been on a 2 week sell reversal for 2 weeks, right? And the S&Ps have been fighting it. In fact, yesterday at one point the S&Ps were unchanged and NASDAQ was down, I don't know, 1.6, 1.8%. Can't remember the last time I saw that. And then finally the S&Ps capitulated. So this week's off number is 41.75 or about 25 handles underneath it. But keep in mind it's Tuesday, and to have a weekly reversal, that takes a Friday close, right? So under 41.75 this week, you have your first 2 week reversal, which NASDAQ weakness, which, smelling higher yields, among other things, has finally had an effect on the S&Ps. Because I believe the S&Ps made a couple of new all-time highs while the NASDAQ was rolling over. So it should be no surprise. Um, from the COVID crash low, the NASDAQ led it all the way up, outperforming all the way up, and it's going to lead in this sell-off as it is. So it's still the preferred short, and now you're starting to see that they can't keep rotating to keep certain sectors up while, say, tech is under pressure. And we have the oil down again. We have the oil down today, almost a buck. Okay, yeah, copper. I haven't looked at it. I know it's still blowing off. And we talked about the yield. Also, yesterday I talked about that I thought we were in a failing rally in Bitcoin, which I think is manifesting here. And I think that we're going to trade to this 200-day moving average. It's under 40,000. So to me, this looks like a real nice failing rally. Good morning, Monica. Let me take a quick look at copper. I don't know if I even have it up here anymore. I only had delayed. No, I don't have it. So you found there's always going to be exceptions to the trend, Sensi, but if these trends prevail, copper is not going to be, invulnerable to it or Kospi. Oh, it reversed yesterday, Ben. Ben, nice call. Do you think this is a week? I remember Friday you were saying we were in the zone, in the time zone. Okay. So Ben Maldonado had talked about, you know, the high when he was in the chat room last week. So looking at currencies, also we had a pretty good sell off in silver yesterday. I know it's bouncing back, but um, I actually had a successful trade here. I'm not saying that we can't make a new high here. Good for you. Congratulations. But this could end up being a failing rally in silver because it's, also an industrial. Whereas look at gold. So I'd say right now, just to make another comparison, we might even have a little 3 drive here. I don't like the RSI setup. It's still too strong. But why don't we just call silver the NASDAQ and gold the S&P for now? Because gold has been holding up much better and outperforming silver in the last week or so. Not today, but for most of the time. We're threatening new highs here, but let's see, 2 hour. We may not confirm on the 2 hour in gold. I thought there was a chance for us to get up to 1850 ish right here, 1855. Maybe it's going to make a run to 50%, but I don't think so. Whereas silver is playing around the 61.8 level. All it did was poke through it intraday yesterday. And that's pretty much what I have. We did have some follow through to the downside in bonds. Very negative day in bonds yesterday. Looks like new lows are coming. And I talked about all the different asset classes that could higher yields could have an impact on. So here's the higher yields coming. The 10-year finished okay. It's trying to break out here. We'll see. So still think there's a pretty good chance. The 10-year makes a new high in yield, although the back end is weaker. And I believe it was Amira who asked me what SQQ was when I was buying it down here at 1050. We're on the verge of a breakout there. We have a gap higher opening coming off a breakout. I think when Amir was asking me, he goes, "What's SQQ?" It's a triple bearish ETF on the triple Qs. So close to 20% from when I talked about it. To me, it looks pretty good. Longer term, I think it could have a long way to go. You're not late, even though you feel late when you look at the NASDAQ being almost 800 points off the high. So the S&P was camouflaging weakness in mega caps, and the darlings of Wall Street were the first ones to cave. So watch at 4175 level. Maybe rallies back to that number, won't hold. But that's going to be, I believe, an important event. NASDAQ telegraphed it for weeks, several weeks, being an underperforming before it peaked and then selling off more dramatically than the S&Ps, which were even able, while the NASDAQ was sliding on little bounces in NASDAQ, S&Ps were able to make new highs. And now it looks like they're caving pretty good too. I can't remember the last time I came in with S&Ps down 30 handles on the opening. So it's been a while. Also, last week we couldn't hold the 19 and 20 level and pulled back to here. Looks like we're going to hold the 19 level now. VIX looks pretty good to me. I think you buy pullbacks in VIX, maybe back to 19 if it does pull back. That's a warning sign that volatility is possibly putting in an important low here. We're back against the highs that we had last week. I wouldn't fade the VIX here. So Blake, S&Ps, finally, pretty dramatic 2-day sell-off anyway.
Yeah, yesterday I think the market, just kind of slid on. Well, there was like one of the key components, in my opinion, was the move lower in Bitcoin. Like late in the session, Bitcoin just kind of slid, and I think that weighed a little bit on risk. And the dollar was starting to suggest, I think, and precious metals that risk appetite was going to wane. And it's interesting. When you look at everything this morning, and here, let me go. I'll take over the charts here. When you look at everything this morning, you would think that we're on the road to recovery and risk. That's what I would think. When the reason why I say that is if you look at you go over to the dollar Mexican peso, it's trading heavy or trading through support. And I'm like, oh, look, dollar Mexican peso is heading lower. Well, S&Ps need to be, they should be bouncing. They're not. Right. And then you start thinking, oh, well, the dollar Canadian is still trading heavy. It's not even bouncing. It's stock market's got to be, bouncing. It's not. And, then you look at the NASDAQ and you're like, wow, NASDAQ's down like 1.5% right now, pre-market. It's like, wow, just the market is actually trading really heavy, but like in currencies, we're not seeing that really reflect.
Yeah.
Um,
No dollar bid.
no, well, no, and yeah, and then on top of it, you got the euro that's near its trend highs. You got the Aussie that's firmed up off of support. The Aussie did exactly what it should do. It came down to the breakout point, bounced. The Kiwi is actually firmer. So one of the things that's always scared me, Dale, and I'll tell you this. One of the scariest things to me, and I don't know if it will ever materialize, but it is something that I always think about in the markets. And this has been probably for the last 2 years. So to the reason why I say it's for the last 2 years, because it was how I felt before the COVID crisis. So when you're talking about like when you're talking about like the or pre-COVID crisis, remember stocks were grinding higher back then. Do you remember that, Dale? When it
Yeah.
was just like, oh my God, the market every day. Here we go. It's
Yeah.
I'll go previous COVID crisis, right? Here we go.
Yeah. I mean, it was bad in Italy, and I think we started to cave when we ignored Wuhan, but then once it got to Italy and it was,
Yeah,
desperate, it started to feel it.
right. But remember pre-COVID, right? Pre-COVID, this is what the market looked like, and this is a daily chart. Before COVID, we sat here and we're like, every day the market went up, and we're like, oh my gosh, like there's barely any pullbacks right now. And I said, we started worrying about there's things that were like percolating in the beneath the surface. And the worry that I had at that point was, boy, I sure as hell hope we don't get to a situation where stocks are sold, bonds are
The,
sold, and the
and the
dollar is sold,
dollar.
and the
Yeah.
dollar, right? And that's
Yeah.
how when we're now, you
Yeah.
know, throw massive amounts of liquidity to the market, and put the market where it's at currently. We see stocks pulling back a little bit. The dollar's non-responsive, and that does concern me.
And bonds would have gotten a bid on a day like yesterday, and they just, no flight to safety in treasuries, that's for sure. The gold
No,
held up the best.
yeah. So I guess the fear is what happens when, or I don't want to say when, I just want to say if. What happens if U.S. treasuries are sold, the U.S. dollar is sold, and equities, U.S. equities, well, you can say U.S. equity. I just say equities in general are sold. That's a scary situation. And that's why I look at today's price action. I'm like, wow, NASDAQ's weaker, S&P's weaker, uh, the Dow's weaker, and the dollar is actually pretty weak right now. Now, I know a lot of it is in the dollar yen, and we should be keeping an eye on the dollar yen, and all these yen pairs. And I want to this is what I wanted to bring to your attention today. Okay. I want you to look at these daily charts. You guys that trade currencies with me, I want you to look at these daily charts from yesterday, and I want to show you some things. All right. Here's the euro yen. That's a false breakout yesterday. And I don't know if you notice it, that's a gravestone doji. Now, today, the candle is a little white, but remember, there's a lot of time left in today. We've been in this ascending wedge. We're kind of above the wedge, but Dale, what's your famous pattern when it goes above a wedge and then back down?
Oh, a throw over?
Yeah, I mean, could we get a throw over in the euro yen? I mean, is it possible? I think it's possible. So, we have the euro yen, got to keep an eye on it, especially with this false breakout yesterday. Look at the pound yen strong. I don't want to, I don't really, the cable's just, it's been very strong currency. But look at the Aussie yen. This is my chart of the day yesterday. For those of you guys that, let's go to the blog. Here's the chart of the day. Okay. You can see the Aussie yen here. And also, guys, this is Trader Summit. You can get briefed from Mark Chandler in the morning, right? Also, you can go over here and get the chart of the day. Also, Trader Summit. One of the nice things about Trader Summit, I'm sorry, I just want to plug this really quick, is that you see where the part that says breaking views. These are all like latest. It's nice kind of getting all of the posts in one location. Like one of the things that I've always bugged me when I'm doing analysis in the morning and I've got to search around different areas to look for my research. Having like one central location to go to is always nice. And that's kind of what Trader Summit, go to that breaking views area. But going back to Aussie yen. So the Aussie yen false breakout yesterday. There's another gravestone doji. Here's the Kiwi yen false breakout. Whoops, let me get rid of that. False breakout yesterday. Another pin bar gravestone doji there. Canadian yen, 161% extension. If you guys are, using Forex analytics, you know that that I got short Canadian yen yesterday, close to 90. So I'm just showing you some of these yen pairs reversing, and then we have the dollar yen that's actually trading really heavy today, and you can see we've broken this this triangle, and so the dollar yen looks like we're heading back to 108.35. So stocks are weak. The yen showed a reversal yesterday, and I think the yen pairs could actually start to move lower. And I guess what I'm watching really carefully is just the dollar in general, because I want to make sure that the dollar doesn't really buckle under some pressure. So that's kind of what I'm looking at. And let me ask Steve and Stelios if they're here this morning.
Good morning.
Hey, good morning, Stelios. Let me ask you this: is my fear unfounded? I don't know if you heard the conversation a little earlier that I was having with Dale. Did you hear what I was saying earlier?
Yep.
So is that unfounded, or what could really put us in a situation where we have dollar weakness, stock weakness, and bond yields higher and treasuries under pressure? What do you think?
Well, what I'm looking at quite closely is, I didn't have time to say this yesterday on Faces. I talked about it on Morning Edge, is commodities. And we are seeing big increases in things like, lumber, obviously everybody knows about, the copper, and, even oil. Okay, last few days it's kind of steady, but overall these things are going to feed into the economy, or they're going to feed into the prices. The problem we have is that these are not primarily due to higher demand. Actually, they're not due to higher demand. It's basically we're having difficulties in terms of supply chain. It's difficult to source a lot of commodities, and when that goes, and I think they're already spiking, then this is going to translate into prices of goods and services, and you're going to get inflation. Inflation is already happening. Now that is going to lead to higher yields. It has to, eventually, no matter how hard the Fed tries, is going to lead to higher inflation. And the problem with the dollar theoretically should be spiking, but the extremely loose monetary policy, the way the U.S. deficit is in trillions now per year. It used to be 1 trillion, and we said, oh my God, that's incredible, and now it's more than that. So I think the dollar, unfortunately, apart from potentially a short squeeze that might happen, the dollar is just going lower. And we said this when the DXY was near 100, and I think it's going even lower. So with yields rising, we know this is bad for stocks and risk assets. So the way we're going, I actually don't see how we can have another scenario apart from higher yields, higher commodity prices, lower dollar, and lower stocks. The question is, when will it actually manifest itself? Because we've seen stocks just keep going up and up every day. But
Yeah, well, today they are not going higher.
yes.
And matter of fact, as you can see, volatility is trading at its highs right now, and it's breaking higher. And this is a pretty classic risk off. And so what I'm going to be interested to see is if the dollar can actually turn the corner here. I'm really I get really nervous about the dollar when you have risk off. And one of the things that I used to point out, well, for the last several years, and you guys probably recall, is sometimes it takes the dollar a little while to assert itself as the risk off currency. We might see the dollar perform a little bit better against some of these commodity currencies, but a lot of times you don't see the dollar really perform well as a risk off hedge, unless you see a really big move lower in risk. And obviously right now that's not what we're getting, but I think the S&P looks a little vulnerable if we get below 4110, right, Stel?
Yes, absolutely. And I have to agree with you. I think if we get like a proper risk-off move, I'm not talking about 1 or 2 days, usually the dollar spikes. I think this time is going to be different. I don't think necessarily it's going to drop a lot, but I think it's going to underperform. It's not going to be, it's always a safe haven. I mean, I think we all know that when the boop hits the fan, everybody rushes to dollars, and they probably will again. But I don't.
Sorry, there was some lag there. We lost you. Say again.
Oh, really? I said when they.
You
sorry.
didn't get it.
Oh, I got it now. Sorry. Yeah. So I think people will rush to the dollar, but I don't think it's going to be the same as with the other, recent times when we did get proper risk-off moves. That's my view. Obviously, I could be wrong, but that's what I think.
Well, maybe and Steve, let's hear your we'll hear your comments here in a second. But let's say, for example, and I'm just going to say, let's define proper risk off. If you're looking at the S&P right here, and I think if we drop, let's say 5 or 6% back down towards 3,900, let's just say from current levels too, that would be probably what, 10% off the highs. No. Maybe 8% off the highs. Yeah, I don't think you're going to see much response in the dollar. But I've always said this, and if you guys are longtime listeners of the Face webinar or the Morning Edge from years ago, I've always said we see more than a 20% risk off in risk assets. That's when the dollar starts to really firm up. That's when people go, oh crap, this is real. Now, usually that's the later stages of a sell-off too, which, let's just say in this case, we dropped 20%. Well, once you're down, like let's say 25, 30%, you're at megaphone support. Then that's probably the time that you need to be, long risk and short the dollar anyway. So the dollar spikes up and you sell into risk. So I don't know, but it's really pretty hard. And I'll hear your guys' comments on this. I think it's really hard to even imagine that type of risk off move with the support that we have from central banks at this point. What do you guys say?
I agree, and especially considering the unwillingness to remove that support. Every time we've seen somebody like Yellen, Kaplan, or whoever else even attempt to be mildly conservative, having to do with the path forward, we see a reaction from the markets, and immediately they either retract or change their comments, or they have somebody else, in essence,
they bring
do it
out
for
Bullard,
them.
right?
Yeah, exactly. Do it for them, right? So that tells you, in my opinion, everything you need to know, mate.
Got it. All right. Well, hey guys. So if you heard my comments a little bit earlier, if you missed them, if you're just tuning in right now, first of all, thanks for joining in. I'm going to just really quickly point out these yen pairs. Yesterday we had a lot of false breakouts above the highs, and that would, euro yen, not the pound yen. Pound yen, the cable's been really outperforming. The Aussie yen false breakout. New Zealand yen, false breakout above the highs. Canadian yen, we had the 161% fib level extension. And again, I'll reiterate, if you're a Forex Analytics subscriber and you're in the chat room, you know that we were short in the Canadian yen yesterday, around the 90 yen level. So, but we're seeing a bit of a reversal in these yen pairs, and that probably does coincide with stocks actually hitting lows. I mean, look at the S&P is at its lows of the session. Here's a 15-minute chart. That's what the S&P is doing right now. This is what the Nasdaq's doing. We're at the 161% extension of this move. Matter of fact, you got to think about that for a second.
Strange looking melt up.
What's that?
The stock index it's the strangest melt up I've ever seen.
Well, hey, look, after you guys, after this huge, I mean, to have a little bit of a pullback doesn't surprise me.
Yeah.
After having such
We're back to like last week's levels.
It's going to your megaphone
Yeah, exactly.
low, Blake.
Yeah, look, oh my God, we haven't been to these levels since May 6th.
Well, Rome wasn't
Real
built in a
disaster.
day. Rome wasn't destroyed in a day either.
That's true. That's true. Good point. So Steve, what do you got? What are you looking at out there?
The Noke.
Something other than the I came in a little bit late, so I hope I'm not just reiterating what you said. We've talked about the importance of 4110, 4115 for the S&P. So that's one of the things I have my eyes set on.
Yeah, because it's kind of hard to get too excited about the market.
Exactly.
Sitting above these this really key
exactly.
Yep.
Exactly. So that's one thing. The other thing is I started focusing some time ago, and it plays out beautifully. I think it has perfect technical behavior, which is the ratio of the Nasdaq over the S&P, which had given us a very nice bearish signal, and that works out beautifully. So I think for somebody that doesn't want to take a direction in the risk markets, in essence, higher or lower, given the fact that we are very elevated to want to buy, but on the other hand, this type of bull markets, it's extremely hard to even want to try to fade. So this is, in essence, a play that has to do with the stock markets, but doesn't have a direction higher or lower, having to do with how risk assets are going to perform. It just looks like the Nasdaq, will continue probably to underperform the S&P for a period of time, with whatever implications that might have. I think if that keeps on going for longer, that might also trigger some kind of a corrective move in, the whole stock market complex. But clearly we're not there yet. I'm also focusing on the DXY because it has broken down and remains very weak, despite, and that's very interesting, despite the move lower we're seeing yesterday and so far pre-market today, having to do with the US, because Europe is already well on its way to the end of the session soon enough. So I think that's interesting, and it shows what we were talking about, that the dollar might be saved by equity weakness. But I think that the dollar is in a clear downtrend, which means that when stocks are doing badly, the dollar is going to be bid. But when stocks are doing well, the dollar is going to be dumped more than when it, how much it rallies when things are not so rosy. So I do think the general direction for the dollar is and remains lower.
So basically and that's, you're basically echoing the sentiment that Stelios had as well. If stocks come down, the dollar is going to bounce, but the bounce is going to be, a little or shallow. It's not gonna, it's gonna be more of an underperformance than anything.
Exactly.
And I don't disagree with that. And I would assume, like I said earlier, that the dollar to even gain some really strong footing is going to have to see equity markets off pretty aggressively. So
Exactly.
yeah, Dale, I know you have your interview coming up. Let me go ahead and just mention really quick, guys. Our webinar sponsor is Pepperstone Securities and Forest Park FX. So make sure you visit our webinar sponsors, please. If you're watching us on YouTube, make sure you give us a thumbs up. If you want to learn how to get Forex analytics for free for several months, up to several months, open a Pepperstone account. You have to click this link right here on our website, and then you can get up to 4 months for free. And if you want cashback rebates because you're in the United States or Canada, visit Forest Park FX. They will assist you in getting cashback rebates on your trading, and I don't know why you wouldn't do that. So guys, gals, thank you for tuning in with us today. We'll see those of you that are in the Forex analytics community. We'll see you on the Morning Edge, where we fill out the bias chart every day. I'll see you there in about 45 minutes with Steven Stelios. Dale, it's all yours. Have a great interview.
All right, good hunting, Blake. And
Thanks,
on the
Blake.
Morning
Thank you,
Edge,
Blake.
that edge means that all the guys that come in there, they have to shave. Use your Morning Edge before you go into the Morning Edge.
Hey, you know, Steve took his beard down. I'm kind of,
yeah. That's his
jumped
edge.
back. He jumped out of out of 2017 directly into 2021 by taking his beard down.
Oh yeah. All right.
Yeah, that's old news because several days have passed. So, you know, they have the tendency of growing back. I've noticed
That's your
Oh,
edge,
geez.
baby face.
See you guys.
All right. So George Abash, welcome back to Face. How are you, buddy? Waiting for you to.
Okay, I'm here with you.
You are,
Good
hey
morning.
George. Long
How are you,
time.
sir?
How have you been? I know you went through some stuff that makes trading a cakewalk. Some physical things. How you feeling, buddy?
I'm doing pretty good. Thank you for asking. And actually, I was gonna say, very good analysis on the market, and I share with all of you a lot of the concerns that you guys have over, the state of the market and the volatility, and especially in Nasdaq, because Nasdaq is one of those instruments that I trade on a daily basis, and it's definitely going through some stuff. But on a personal basis, I'm not shaving my beard till my
All
next birthday, which is
All
gonna
right.
be
All right. Well, then
September.
all right, we let guests do what they want to do. So you have the freedom. And I remember the last time we were going to get together and something happened, you were going to address what it was like and how you handle trading during drawdowns. Are you sticking
Absolutely.
with that, or were you going
No,
to? What a
absolutely.
memory, huh?
Absolutely. And I tell you one thing, when we initially talked about a good topic to discuss for today, in my head, I was like, okay, we need a genuine topic that people actually can benefit from. And I was like, okay, when you said, let's talk about drawdown, I was like, man, that's not a sexy topic,
Yeah.
but at the same time, it is such a critical aspect of trading success, and it gives you longevity in your trading career. And the way I handle a drawdown, and we all go through that. Nobody is perfect. We're all human. It's part of
Yeah.
trading and part of the business, and you develop a process to help manage it. And three aspects to that I concentrate on whenever I'm going through a drawdown. One of them is emotional balance. The second one is account risk control, and also trade sizing. So those
Okay.
three elements are the cornerstone of managing yourself as you go through a drawdown, because ultimately, what is the purpose here? My purpose is to keep that drawdown small and the longevity of it very short. Correct?
Yes.
That's what the purpose. So this way you could go back to having fun making profitable trades and increasing the size of your account and growing through this business. But like we said,
How would you define? I think different people will have different views on what a drawdown is.
Absolutely.
You know, so I
Absolutely.
mean, for you, George, when do you acknowledge, hey, you know what, I'm in a drawdown here?
A drawdown, I mean, you said it perfectly. I mean, some people have a lot more risk tolerance than others, and that it goes into the definition of what you consider personally to be a drawdown. 10, 15% is a drawdown. If you go anything, you know, more than that, that could actually affect the longevity of your trading career. If you go 50%, for example,
Yeah,
that can be mathematically a harder one to kind of overcome.
yes.
So 10, 15%, 20%, that's manageable. And the process that I go through, like we could discuss some of the elements. For example, let's assume you go through at 15% drawdown. That's normal. What should be my um, quick reaction to that situation? What should I start doing immediately to help me put the brakes on and say, okay, well, for whatever reason, the system, my methodology is taking in a little bit of water. How do I get back on the winning streak? Uh, uh, I start looking at trade sizing. So if I'm trading 5 contracts or 10 contracts, trading the NASDAQ 100, and that is ultimately what I trade on a daily basis, then I reduce that size from 5 and 10 to 1 contract. So people who are trading stocks or trading Forex, they can mimic that by going down to 1 unit of that instrument.
Okay.
And the purpose of that is an emotional reason. Most
To
people would.
rebuild your confidence without creating more damage.
My confidence should never be shaken by something that I would consider normal thing in the market.
Okay.
And my confidence in my system should, and trust in my own ability to trade, should not be shaken by the fact that I took a drawdown when a drawdown is part of doing business.
You know,
So
George, it reminds me of a story when I was a young guy and I moved from Chicago to LA because they had a branch office there. And I go, well, you know, I've always wanted to move to California from Chicago. And my manager said this, that, you know, about trading and other things. If you drive a taxi cab, you can't expect not to get tickets,
here you go.
you know? So, I mean, you know, taking a hit here and there is just part of driving a taxi cab.
Absolutely. And I expect it. Like in
Yeah.
my day and in my mental preparation, I'm expecting to actually get stopped out along the way throughout my trading session. And if it doesn't happen, I'm literally like confused. Like what just happened here? And that prepares me to not go into a fight or flight emotional reactions to trading.
Okay.
And reducing your size is actually serving that purpose, is to get you not to fight and not to flight, but to continue to trade, but at just a scaled down uh, 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 scale. So this way you could turn the corner, but turn the corner smoothly without digging yourself a deeper hole. Typically,
Yeah,
what happened
yeah, people will increase leverage to try and get it back. The
because they're
exact
thinking
wrong thing to do.
because they're thinking about money and
Right?
not thinking
Exactly.
about process.
Yeah.
And to get out of a trading drawdown, it's a function of process. You could be simply not connecting with the market on an emotional level, or your system is not generating a profitable trade. But to increase your size in a time when you're not connecting is actually exactly the opposite behavior that you need to exhibit. So
Okay.
by reducing your size, you prevent your fight and flight behavior, and you're focusing on profitable system trades, and you're not thinking about the money. And the only thing you're looking for is to put on good quality decisions. And you're also reducing your frequency of trading. So if you're averaging 5 decisions a day, if you're active Nasdaq trader, or however you trade, then take that by 75% and go to 25% of the frequency, and be extremely selective, and be extremely selective, and looking for the highest quality decisions that you could come. Also, take a break. I mean, take that Friday off. Look at your days and see when you are effective. Like, for
Great
example,
one.
for me, uh, Tuesday, Wednesday, Thursday is my most profitable days. Well,
Mine
why?
too.
It's strange, but it works that way,
No,
because
yeah,
I
go
come I,
ahead.
co- I
You want
come.
an explanation?
Absolutely, go ahead.
All right. Well, how markets close Friday? And you know, it's a lot of evening up Friday, and I tell people never try and make your week on Friday. I mean, maybe some people did when there's an NFP, but because you usually have follow through from last week on Friday, Monday. So the meat of the week is, especially for, changes in direction, is Tuesday, Wednesday, Thursday, because Monday's a follow through day and Friday's a book squaring day.
Absolutely, and that's well said. I didn't even think about it in those terms, but I look at
Yeah.
my statistics, and I just keep finding my losing days to be Friday, and
Yeah.
Monday is
That's
always like a
interesting.
50-50, you know?
Yeah.
And I'm like,
Yeah.
okay, so why is that? And your explanation makes perfect sense.
Okay.
So guess what? If that's not when you're effective, and maybe different people are different, but take the Friday off and have an extended weekend and just refresh and regenerate yourself. So this way, when you make decisions the next week, you have more energy and more focus, and you're more effective and more connecting. Another thing that I also do, when I'm trying to get back in connected with the market and more effective, is I do what we call in the room shadow trading. So before I make a decision that is with real money, I mentally communicate through the room. Hey, listen, I'm gonna buy here, sell here. This is my stop, and this is my target. And I do 5 decisions like that. And if I am 3 decisions correct and 2 decisions that are expense trades, that means I qualified myself to actually go on to the next stage of the trading process, which is trading live. So if I am three expense and 2 profitable, then I need to do this again and again and again. So what that does is it measures your connectivity to the market, and it measures uh, uh, your decision making process, and if you're in harmony with the market or not. And if you're not, there's no sense in actually putting a live trade till you are in sync. So that
Okay.
saved me a
I've
lot
never
of
heard
money.
that before. That's an interesting exercise.
Yes, because a lot of traders, and I work with a lot of them, they just wake up and start trading, start
Yeah.
making decisions. But like a car, you need to turn on the engine and let it warm up.
Yeah.
And that's what that
Or
exercise does.
athletes, before they're
Exactly.
in the race, they're stretching, they're getting ready, they're taking warm up swings, whatever the sport is. So yeah, interesting. What I've noticed for me, George, is I know going into the market by doing my work on the weekend what I am looking for and what I'm going to do. They're almost like planned out trades for the week on the weekend. Of course, you don't know how the markets are going to come in early in the week, but you have a plan. And then when uh, most of those trades, they have a higher probability than when I come in and it wasn't planned on Saturday, and I go, yeah, you know what, this looks good, I'll give it a shot. So I know you don't plan trades because you're just going with the flow of the market. But do you ever do that on the weekend? Kind of have a, you know, uh, go over where you would be a buyer, where you'd be a seller, what the market may offer you next week, or is it just going with the flow during the day?
I made a decision long time ago that my weekends are free from
Okay.
anything that is related to trading. So
Wow.
when Friday is done,
I'm
I
signing
literally
up.
I'm literally
I want to
signing
do what you do.
off. Like mentally, I check out. I
All right.
literally mentally check out. So Friday, Saturday, and Sunday, I'm really doing a lot of things that are either sports or activity or whatever I love to do, workout, photography, things like that.
Okay.
And then Monday, like morning, I spend 5 minutes looking at the market. Then I start making decisions based on that, and that keeps me fresh
Okay.
because I'm not overwhelming my senses constantly with the market because it sucks energy out of you. And we enjoy it, we love it, but also you have to manage yourself emotionally and make sure there's a balance between your trading life and the
And your
totality
love
of the
and your
totality
love
of
life.
love life. And it used to suffer a lot. Trading used to be my wife, by the way.
All right.
Yeah, so
Okay.
that's an important. So trade sizing, let's go back
Yeah.
and review,
Okay.
is very critical. Emotional balance, on how you prepare in the morning and how you manage yourself emotionally throughout the day will have a very distinct impact on how you turn the corner when you draw down, and also how you manage your account. So if we go back to the idea, and I tell a lot of people in our trading room and the people that I work with, listen, there is a certain level of pain that will happen by you choosing to be a trader. It's gonna happen. Your senses are gonna get hit at some point. Nobody likes to take a drawdown or feel like they're not progressing, but you better accept the pain of discipline, or you will experience the pain of regret. And that's a
I like
statement
that.
that I tell people on a daily basis. So it's going to be painful either way, because to be disciplined, it requires a lot of focus and attention, and in some ways there's pain associated with it, but that's a lot more pleasant pain than the pain of regretting that you could have done something to save an account that went to zero, for example. So account risk control comes into that equation. If you're down 10-15%, I tell people, hey, listen, take 5%, additional 5% of risk capital, and divide that into 5 trades, so 1% per trade, and make decisions that are high quality. You're rested and you are focused and you've done them exactly by the book, and they are not oversized. They're simple. And now you made 5% out of that 5%. Then now it's time for you to start adding more size. So you double up your size and do another 5% like that. And that is the other side of you getting back into profitability. Only once you went through the step of sizing correctly, you made sure that you're emotionally balanced. Now it's time to turn the corner, and that's how we go about it. Is you take 5% of risk and work that to another 5%, and then just repeat that process till you're whole, and then back to equity high from there.
Okay. Do you find that people's expectations, George, of um, that you can't be lazy doing this, that really, if you have a good work ethic, you have an edge of ending up being a good trader because you're willing to put in the time. A lot of people, and that's why they gravitate towards following different people or joining signal services. They just want the money to drop into their account.
Yes, and I experience you experience people like that in any business. actually. And in the trading business, because the barriers to entry is so, you literally, you could 5 minutes, you could open an account, dump some money, and you are a trader. And the expectation, especially in the age of cryptocurrency, and we know you could make 1,000% in a day, just buying the right thing, and you don't really have to be smart, you just have to be lucky. It gives people the wrong impression of what trading is, professionally trading. And trading professionally requires you to put on the majority of the work on yourself, believe it or not, on how to understand you in relation to the market versus to understand the market. Because in trading, you're projecting. And if that projection is not balanced, you tend to project your hopes and fears and not listen to the market. And actually trading, if you look deeply at it, it's a listening business where you are listening to the flow of the money, and not necessarily analytical where you are projecting what you think. And that is a distinction a lot of people don't pay attention to.
Yes, how can you get a market message by seeing how something is underperforming when it should be doing better if you don't listen? How can you hear any message unless you listen?
Absolutely. And the way you measure that skill is by making assumptions and see if the market is actually giving you the feedback that you think it should. Then when you go through that process, you start seeing, okay, well, if my assumptions are telling me the market should bounce here and it's still not bouncing, then the message the market is giving me is not, I'm not listening to it. Okay, so listen to that part. And it's one of those things that the more you practice it, the more it becomes like a muscle memory for you. But back to the big picture here, those three elements are the cornerstone of turning the corner on a drawdown. Account risk control, trade sizing, emotional balance. Each one of those, you as a trader have to invest time, because you are unique in the way you understand and read the market. No two traders are the same. So spend time on you, journal, figure out the times in which you are profitable versus not, look at the different signals that work for you versus not, and make sure that you are emotionally balanced along the way as you go. And again, back to that point, invest in being disciplined, even if it requires a lot of effort, because the other coin is the regret part. And that is nobody, we all experienced that, by the way. I definitely did. And I learned from those experiences, hey, listen, if I only did put a stop here, I would have saved my account. Well, how many times do I need to learn that lesson if I want to be a professional trader? I only needed to know it once. That's it.
Yeah, that's good. You learned really quickly that getting hit in the head with a hammer hurts.
Yep, it does.
They had to take a few swipes at me. Let me ask you about the smaller rectangle you have in there, the NASDAQ. Is that a long entry that you had at 1324, and your stop is underneath it with the red dotted line, and your target price is back at the high?
Okay, so I'm trying to see what you're looking at.
NASDAQ daily.
Yes. The daily. Okay, so let's look at the daily here. Okay, so right here, that's the okay. So target number one, basically what you're looking at is the market made a shift in momentum here and hit target number one, which is 1400. So all the system that you're seeing here is auto-generated, and it tells us entries, exits, and stops on the bigger picture. and the same system is actually mimicked on the shorter time frames. I mean, overall, when I look at this, what is the market telling me? The market telling me that it's going through a very deep rotation lower, which to be expected from all the long. I mean, look how far we came from 8,000.
Yeah, it's Mount Everest.
Exactly. So people are hiking down a little bit right here, and the thing about which I share from hearing the rest of the people in the conversation, they were talking about, okay, this market is due for this correction. We expected this correction to happen. It's happening. Is also on the flip side of that. What I'm paying attention to is this, at least on a short-term basis, right here, is the extension phase of this market. We have between yesterday and into today, we went from target number 1 all the way to target number 5, which is below 161. Typically, almost 90% of all counter trends happen in this spot right here, where the market will make a low and make another higher low, then price stability will ensue, then counter trends will start to shoot up into 250 and 300. So I am conscious of that, and I'm going to be looking for these rallies as an opportunity to kind of get short in the market again. But I wouldn't necessarily be looking at this as, hey, I need to get short right here. Why? Because the market is very vulnerable for counter trends whenever you go past target 4 and 5, and that system that we have is critical. Another thing that I want to share with people is always pay attention to the FOMC meeting numbers. So that 1 second before the FOMC announces whatever their policy is, mark that price and keep it on your chart. You will find out that the price react to that number significantly on a daily basis and intraday basis. Okay. So that is a tool that we use in the room on a daily basis, and I mark every FOMC meeting, and every time we come to it or come back to it, we see the market react in a meaningful way that we can take advantage of and position ourselves for.
Nice, George. I'm getting some comments. Susan Taylor said, found this interview very useful. Thank you, George. And so now it's a segue for you to show people that agree with Susan how to reach you.
Yeah, absolutely. And thank you for asking, Susan. A couple of things. If you have any questions about what we do and how we do it, you could reach us by this email. I'm going to put the link actually in the room here on Zoom. So support a Harmony Trading System. We're offering everybody come and see what we do and how we do it as far as trading and risk control. And we give you a month of free access. Just come and see us. There's no credit card or anything like that. Just come and be our guest for a month and see the trades that we take on a daily basis. You want to call me and talk shop and trading? Well, guess what? Here's my phone number. As long as you promise not to call me at 2:00 in the morning, we're good. But that's my phone number. And
just turn off your phone at night.
Hey, maybe.
Sorry, I only call people at 4:00 in the morning.
Steve likes to win. Steve will be your daily alarm clock now.
Oh boy. Well, anyway, Steve, looking forward to hearing from you. And that's our website, harmonytrading.com. I took the website down a couple of days ago because we're doing maintenance and upgrade, but that should be back up hopefully soon, within a few days. Okay. But those are my contact information. I truly enjoyed being with you guys today. And Dale, you're always a gentleman, and love talking to you. And you guys have a profitable day and a blessed day.
You too. Thank you.
Thank you, George.
All right. We'll see you guys soon.
All right. Remember, everyone, don't just count your Ranko bars. That's right, Monica. Count your blessings and continue to be informed on the Morning Edge in 15 minutes. And we'll see everyone tomorrow. Good hunting the rest of the day. Well, 4 a.m. is when Rocky Balboa got up to start training to fight Apollo Creed. So Rocky Balboa and Dale Pinker, the coach, get up at 4 in the morning. All right. Anyway, so
All right.
that's a wrap, everyone. Thank you very much, George, and
Thank you. Thank you.
we'll see everyone tomorrow.
All right.
And don't forget the guys in the Morning Edge. Adios, everyone. Thank you, Steve Volge.
Bye bye, Dale.
All
Bye-bye.
right. That's a wrap. Adios.